Here on the Market Day Report, it's time to check out what's going on with the markets. We opened just a little bit ago, and this is taking our first look at the numbers, and they are mostly lower. Then we're going to get to a little bit of analysis. This DeweyStrickler here in just a moment. We did have some export sales on the overnight, and that factored into this morning, but it's a brand new month, it's a brand new week, it's a brand new trading day, and this is where we're at so far. We got the corn market down anywhere from 1 to 2 pennies across the board. December corn down 2 at 3.53 1/4. You go all the way out to July, we're down 1 1/2 at 3.82 1/4. Then over to the soybean market here. This was a market that was weaker on the overnight trade. We're still lower this morning despite that 132,000 tons of beans that we sold to China on the overnight. November soybeans down 10 1/4 right now at 9.58. The wheat market was lower on the overnight trade as well, and those lows are accelerating. It's December Chicago wheat down 6 3/4 at 441 1/2. July wheat down 6 at 484 3/4. Kansas City wheat also lower. July down 7 1/4 at 483 1/2. July Minneapolis wheat is down 13 cents at 632, and December cotton right now is down 48 points at 67.97. For analysis, let's visit with DeweyStrickler. He is with AgWatch Market Advisors in Franklin, Kentucky. Good morning, Dewey. Well, we would have thought that maybe these overnight sales might have give a little bit of support to the grain market, but the grain market continues to fall by the wayside.
Yeah, you would have thought that, but it just didn't happen here. There's a couple of factors we got working in the market. One, we do have a stronger dollar here today. Two, we do have some pretty open weather here for harvest for the next several days. And also, we're still hearing that yields are holding up fairly well. And you look at the report that we had Friday, the grain stocks, even though they were considered friendly, you're looking at stocks of corn at a 30-year high, beans at 10-year high. So I think that's just beginning to resonate, and the markets are backing off accordingly.
Well, with these prices drifting lower, do you see some support in here that we might be able to bounce off of? And I'm talking corn and soybeans in particular right now.
Well, on the corn, we've been trading sideways for over a month in the corn. We put a low in at 344 1/4. Market has made no effort to have an upside breakout of that range here. The longer that we go into the month here, the greater the likelihood you'll see an upside breakout. But as I've mentioned to my customers, I cannot rule out corn falling down below that 344 1/4 low before we put in a measurable low.
And that would certainly be in relation to a harvest low. What about the soybean market? If we look at the nearby November soybeans right now, we're trading in that 959 range. Do you see support under that in the 920s, 930 level?
I look for support to come in here around the 945 to about the 935 area. I think the beans are going to go into a period of consolidation probably for the next couple of weeks or so. We still got some concerns, even though we had some rain in Brazil. We still got some concerns here of what the weather's going to be like. But I look for a period of consolidation here for a while here in the beans.
All right, the wheat market rather anemic this morning. Also keeping a sharp eye on that. But some of those losses in the overnight trade in the Minneapolis wheat pit were pretty well. They were up in the double digits even.
Yeah, it's hard to get something going here in the wheat right now. The funds are heavily short about 500 million bushels of wheat, but they're pretty comfortable with that. We need to see an improvement in exports, or we need to see a worsening of conditions in Australia to kind of catch this wheat market on fire. Otherwise, it's going to be sort of like the beans, and the corn market may be range bound for a while.
All right. DeweyStrickler here with us. When we come back, we're going to check out what's going on with the livestock and the open there, and we're going to do that next here on the Market Day Report. Stay tuned. Getting underway this morning with a brand new month and a brand new week and a brand new first day here at the markets. And DeweyStrickler is here with us to talk about all of the analysis. And as we were in the middle of that break, Dewey, we were talking a little bit about the Dow Jones Industrial Average. It looks like it's just kind of taking its incremental ways, trying to get closer and closer to maybe doing some closes above 22.5 on its way to 22 or maybe 23,000. So this morning up 52 right now is what the board shows here with us at 22,457. Does this give us some kind of an indication of what fund managers are thinking about the commodities?
Well, I don't know about the commodities, but they're still friendly here toward the Dow. I think the Dow eventually is going to go up to about 24,000. I do think that we're probably getting close to a top here in which the Dow could break back for about 7 weeks, maybe 10 weeks, then go in and see the final high. Once we see the final high, I could see the Dow coming back down to about 6,500.
Okay, all right. And you talked a little bit earlier about the dollar also eking higher just a little bit today as well. That's going to play a big part in these exports, and those exports are also going to play a part in this protein complex, isn't it?
Yes, exactly right. And I think, as we mentioned here this morning, that's one of the reasons, the factors here, probably the primary factor why we're looking at the grains are lower this morning is because of the wheat or the strength in the dollar.
Sure. Asking prices for cattle this week, 110 to 112 already, 174 to 175. Word is that the packers have been relying on their captive supply here just a little bit to carry them to this point. But last week's trade volume didn't completely clean up the show list.
No, it didn't. And when you look at the cattle market here, we're looking, of course, we got increased placements. We're looking at increased production here. That's going to put some weakness here in the cattle market. I think for the past several sessions, we've been technically driven higher, but we need a little bit of help here to get us any further. All
right. And this pork complex, I guess this isn't this kick off official pork month?
Yeah, it does. And, of course, when you look at the pig crop report that we had here last week, it showed that we're looking at an expansion in the hog numbers and so forth. But yet, the market is moving up here. It looks impressive. We could maybe see this, like December contract, get up into about the $62 range.
All right. DeweyStrickler here with us, AgWatch Market Advisors in Franklin, Kentucky. Thank you very much, Dewey. Always good to talk to you.
Yes, sir. Thank you.
Yes, sir. And we've got the lean hog board up here. Let's run through these numbers. October hogs up $1.52 at $56.92. December up 97 at $60.92. February hogs up 87 at $65.92. Let's check the cattle market also, and we start with the live cattle. October down 20 at $108.90. December live cattle down 45 at $114.80. February fats are down 30 at $118.32. To the feeder cattle market, it's right now October down 31 at $151.92. November feeder cattle down 65 at $153.35. January feeders down 49 at $151.03. And as we mentioned, we've got asking prices already kind of established at 110 to 112 in the south, 174 to 175 in the north. No packer bids as of yet. The rest of the show list will be distributed today, and that show list will be just a little bit larger. And so it'll probably be at least Wednesday until we see any kind of more interest in this cash cattle trade. We're just going to kind of tread water here for the next day or so, I think.
All right. Well, John, thank you very much. Appreciate it.
Yes, ma'am.